the conflation of inflation, inflation, and jobs, because obviously that number out tonight is going to be very important to how investors view things going forward.
Well, the GDP report for the fourth quarter, I think, is important because it tells us we're not in a recession as of Q4. We're probably not in a recession here in Q1. The consumer continues to spend. I think there's some reason to be somewhat concerned with Q4 GDP, looking at things like business investment, a bit weaker than I expected. The consumer maybe has weakened over the course of the year. But if you think about the entire year, the first half of 2022, GDP contracted. The second half, it grew at 3%. Annualized rate, that's pretty good. That's a pretty good way to finish the year. What does this mean for inflation? I'm not sure we learned anything on Thursday in the U.S. with the GDP, but as you noted this evening in Asia, in the morning in the U.S., we'll get the core PCE figures, and I think those are quite critical. Probably doesn't change anything for the Fed next week. We're looking for a 25 basis point rate hike. Fed probably hikes, twice more and then gets up to about 5% or so, and then holds rates steady for the balance of the year, in our view. What would make us change that view? You'd have to have the economy rolling over, which we don't see in the GDP figures at the moment. Or you'd have to have much softer inflation than we anticipate. So that's kind of where we're at.
The consumer here is so critical, right? Because it's at this point 2/3 of the economy. I mean, when you think if they're sitting in Washington and as policymakers beyond the Fed, we're talking about consumer spending being critical. We're also talking about, frankly, consumers and their viewpoint about what's happening next, whether it be how much they're going to have to spend on energy bills for the next year, how much they're going to have to worry about geopolitical headwinds. I mean, if you're sitting there in Washington, what is the one thing that you're most worried about in your mind?
Well, if I was sitting in Washington, I'd be worried about the unemployment rate. If the unemployment rate stays low, 3.5%, and household income continues to grow. If you look at aggregate income right now in the U.S., in nominal terms, so before inflation, it's running 6 to 7%. Now, we'll get an update on that this evening in that personal income and spending report, but 6 to 7% nominal income growth it's a pretty good sign. That means that the consumer in aggregate will be able to continue to spend in 2023. So at the end of the day, I think it comes back to keeping the unemployment rate low. Now, the central bank, I think, wants a little bit higher unemployment rate, right, to soften inflation. I guess I'm a bit skeptical how much they can fine-tune that or engineer that. But right now, the unemployment rate's at 3.5. So I think the consumer is in pretty decent shape here.